Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, the European business editor here at the IB Times UK. Well, we're looking at the second consecutive day of advances for European indices. Again, not that great, but nonetheless a nice turnaround from the nadir that we saw on Friday after that dismal payroll report from the United States. What's building the rally today seems to be coming from the other side of the world. There was slowing inflation in China, which has investors thinking that that might give the government a bit more room to add stimulus. It certainly lifted miners and it's helped commodities around the world as well, and that's lifted asset prices here in Europe. And of course, the continued stimulus from the Bank of Japan doesn't hurt either. So central banks once again dictating the pace of asset price movement around Europe. Decent numbers economically from the United Kingdom today with respect to industrial output and manufacturing output in the month of February, both coming in much stronger than anticipated, particularly industrial production, but it was offset to some degree by weaker than expected trade data for the same month, where the trade deficit actually widened to 3.6 billion sterling. Clearly, we're not exporting as much to the European Union as we would like, owing, of course, to the grim economic situation there, but exports to the U.S. also fell off, and that does raise a little bit of concern about the strength and competitiveness, if you will, of Britain's industries worldwide. Nonetheless, sterling did advance quite rapidly after the better reading and is actually trading very strongly into the 153 range against the U.S. dollar. Interesting to see how U.S. stocks are going to open today and whether they'll take the positive tone from Europe on. Of course, we had Alcoa kicking off the first quarter earnings season last night, beating analyst estimates on the bottom line, but trailing a little bit on top line revenue. A lot of questions really as to whether Alcoa is the best benchmark with which to begin or in which to measure the potential earnings, not only for the Dow Jones Industrial Average, but the broader S&P 500. Nonetheless, they kicked it off, and actually in not too bad a way, it has to be said. But again, it'll be interesting to see whether we carry this rally into the U.S. trading session. You can check out all that and more on the IB Times Economy page. We'll see you tomorrow.